Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Qualcomm soars as it jumps into the AI data center market with new chips and computers aiming to challenge Nvidia.
Plus, a huge week ahead for tech earnings with Microsoft, Google, Meta, Amazon and Apple all reporting. We prepare you for the fire hose.
And we sit down with Crusoe CEO Chase Lockmiller to talk about the company's latest $10 billion valuation.
From private markets to public markets, we check in what's happening on the Nasdaq today. Ed, a new record high for most of the benchmarks. We have risk on as we anticipate that meeting between Trump and Xi. Will we get some sort of positive connotations out of the meetings between US and China? Certainly the market's anticipating it, but also looking under the hood, there are some key movers, and I know you're looking at one of them.
Yeah, let's get straight to Qualcomm. Right now, the stock is up 15%. At one point in the session, it was up 22% and on track for its biggest jump since April of 2019. It has come to the market with an NPU, a data center chip for AI and machine learning tasks, and it has a key customer. The stock's pairing some of its gain right now, but this is a severe reaction and an important story, Kara.
It is, and treading on Nvidia's toes on a key week for Nvidia with GTC. Let's get to more on Qualcomm's and its plans. Bloomberg Chips reporter Ian King is with you in Washington. Ian, give us the latest. What already are they signaling to the market with Qualcomm?
Yeah, I mean, there's two things going on here. They're saying, look, we've got a chip, we've taken our time, we've got it right, here we are. We've got a follow-up chip already, we're going to have one after that, and guess what, we've got a customer. So, you know, late to the party, but they're making something of an entry. I think that's the way to look at this.
An NPU, or neural processing unit, is just a specifically designed chip for the task, right? But in that arrangement with Humane, they're saying like 200 megawatt deal. It seems like, you know this, Qualcomm never gets any credit in the stock market when it comes out, but the read here seems to be this is real technology and it's going into a real data center. But I'm assuming they've been working on something like this for a while. Yeah,
I mean, this is a derivative of mobile technology that they had for a while, and what they've done is they scaled it up into the PC world, and now they're scaling up into the data center world. You remember they bought Nvidia a few years ago to improve their processing capabilities, to essentially to go big. And this is, you know, the latest manifestation of it, and they're going after the biggest market available.
ARM's doing well because, of course, underlying technology over at Qualcomm in some way feeds money and royalties over to ARM. But there is Humane being mentioned. There is Saudi Arabia. But what after that, Ian?
I mean, what we were told in the conversations we had and we put in the story is that they are speaking with all of the large data center operators, all of the hyperscalers. So what I think people will be now looking for from Qualcomm will be obviously more customers, more large-scale deployments, more commitments to show that this is not just an experiment, but is real deployments and real, you know, with billions of dollars, as we're seeing floating around everywhere else, behind that kind of story.
Bloomberg's Ian King, thank you very much. It is a pivotal week for technology and markets, with 5 of the Magnificent 7 tech giants set to report earnings. And investors are looking for clues on whether this tech rally can continue. Here with more and what investors are expecting, Bloomberg Equities reporter Ryan Blastelica, you had the task of previewing a monster week. What have you been writing about?
Hey, good morning. Thank you for having me. So I would say that the major takeaway this week, or the major theme that investors are going to be focusing on, is CapEx. People want more clarity on how sustainable all this AI spending is going to be. Of course, this week we get results from Microsoft, Amazon, Alphabet, and Meta, which are together 4 of the major Nvidia customers right there. So anything they have to say about their spending plans, anything they have to say about what kind of ROI they're seeing from AI, all that is going to be very closely monitored. And of course, we have the top 3 cloud companies in Microsoft and Amazon and Alphabet. If we get to see more signs of some kind of an acceleration and growth there, I think that will be very warmly received.
Those hyperscalers, Microsoft, Alphabet, Amazon, not a single sell rating on them, Ryan. And in fact, we're getting upgrades going into these earnings. What are you making of the bullishness here?
It's very universally bullish. This morning I wrote about Guggenheim, which upgraded Microsoft, which I believe there leaves them with 99% bull or buy ratings, and then 1 person who is a hold. So obviously a lot of optimism there. I think if you talk to analysts, people still feel valuations are at least reasonable, maybe a little bit elevated, but all of these companies continue to score very highly on quality characteristics in terms of their cash flow, in terms of their stability and durability. People are positive on the management teams. They're seen as very well exposed to these major long-term growth markets. So there's still a lot of reason for optimism, but certainly it is sort of startling to see that pretty much everyone has the same kind of buy rating. And I'd also flag a story we published over the weekend about Nvidia, which has one bearish analyst, Jay Goldberg, at Seaport. We profiled him. If you're interested in reading that, I'd highly recommend it.
We're always interested in reading it. Ran Plestelika, thank you very much indeed. Look, there has been all of this fear and anxiety of an AI bubble. Can earnings push back against those fears? Joining us to break it all down and the current market signals, what it can mean for investors, Denise Chisholm, Director of Quantitative Market Strategy at Fidelity Investments. Denise, what we love about you is you bring the historical context, the research, the data, and push us forward. Are there any alarm bells ringing as we go into this important week?
Yeah, it's interesting. When you look at the data, I mean, everybody highlighted the fact that numbers have been coming up into this earnings season. And interestingly enough, technology has now re-accelerated from a sector perspective back into the top quartile of its history. And as much as we want to be skeptical and say, well, doesn't that usually mean that we have to mean revert? That earnings growth typically does prove durable when you study history. The more interesting data comes with the fact that they've actually become more expensive, obviously from that almost discount that we saw during the tariff tantrum. They're also back in the top quartile of their valuation range as well. So meaning that you have a matched perspective of expensive valuations and really high earnings growth. The interesting part is for the last 20 years, if you had to decide between an environment of expensive valuations but high growth or lower growth, but lower valuations, that would actually be, it would be a better situation to be in the high growth, high valuation, which has been much more predictive historically.
Denise, over the weekend I did a lot of reading, and the headline bubble comes up everywhere across the newspapers. But there are some interesting kind of points of distinction between a stock bubble and a sector bubble. So in a stock bubble, the argument is, well, prices and valuations are being driven up without the fundamentals to support them. But that is different where you have an entire industry saying, we're going to keep investing in this technology, right? And in the future, we see a return on that investment. Which side of the bubble debate do you sit on, the stock or the story?
Well, it's interesting. When you look at it compared to what we went through in the tech wreck, I mean, when you look at high growth and high valuations, you say, well, that was exactly what we saw in the prior bubble. So isn't this the first early stages of that? Well, relative valuations were actually 70% higher in 2000, and you ended up with almost negative operating margins. Not only are we not negative in terms of operating margins for technology as a sector, but they're actually increasing overall, which is to say that sometimes things are expensive for a reason. And when you look at bubble indicators like CapEx, if you add up all the CapEx in the technology sector and you divide it by the sales basis or even free cash flow, you'll see that there's really nothing anomalous, meaning that as much as some of the nominal numbers are eye-popping, some of the free cash flow is also eye-popping, as is the sales. So again, it's back to that high growth is matched with high valuations. A lot of the time, what you almost see is high valuations are being positive predictors of future growth, which is usually more durable than I think investors expect.
Denise, for you right now, which primary or secondary data sets are you watching most closely for the tech sector?
So for the tech sector, I do think overall this shift between either economically sensitive sectors like technology, communication services, consumer discretionary, and the defensive sectors like consumer staples, healthcare, utilities, the fact that median earnings is finally starting to recover for the first time in the better part of 3 years is actually the best setup for those economically sensitive sectors like technology, even despite the fact that technology has already worked. It usually continues to work as the durability of the earnings story actually broadens out. On top of that broadening out story, you might say, well, are there any tailwinds that actually are positively predictive? Even besides the Fed cuts that we're seeing and about to still see, and the tax cuts that we are still seeing or that have seen and will bear fruit into 2026, remember, of all of the sectors, when you look at lower oil prices, which were kind of a form of a tax cut, technology is the #1 sector that outperforms after that style of a tax cut as it filters through in terms of cost to margins and potentially lower inflation that increases multiples. So I think that there are a lot of things that highlight the fact that there are more tailwinds for overall earnings growth, which is bullish for economically sensitive sectors like technology.
And how global does that data set and do those tailwinds tend to be right now, Denise?
So I would say that from a global perspective, you are certainly seeing earnings growth across the globe. But right now, you are seeing an interesting, what I would say is a change in trend from the last, let's call it 4 to 6 months, where international was accelerating and the U.S. was decelerating slightly. You are now seeing that shift, meaning that U.S. earnings, specifically led by technology, is reaccelerating at the same point where Europe, EFA, and emerging markets are decelerating. That sets up, in my mind, a better risk reward for markets, despite the fact that U.S. stocks are much more expensive. It's interesting when you look at international versus the U.S. and you say, well, these stocks have actually outperformed over the last 10 months, year to date, certainly, and they're still cheap. That seems like a compelling proposition. But when you look over the last, since 2010, so over the last 15 years, you'll see that that's led to 0% odds of outperformance for international, which again highlights the fact that, look, valuation sometimes doesn't say what you think it means. Sometimes stocks are cheap for a reason, and sometimes stocks are expensive for a reason. And a lot of times, valuation almost correctly predicts whether or not earnings growth is going to be durable or not. So I do think that you are seeing the U.S. be leadership from an earnings perspective again.
Briefly, in a historical context, have you ever seen such underpinnings of importance from the private market? Because yes, we worry about bubbles in the public markets, but a lot of them all go back to a few players in the private market like OpenAI.
Yeah, so I think that the places to look from a data perspective are always in the public credit markets to see what we are discounting in terms of the private credit markets. I don't have any specific insight, but when you see more stress being in high yield credit spreads than there is in the VIX or in equity valuation spreads, that's usually a negative setup. We're not seeing that so far. Credit spreads are well contained and there's still more fear in the equity market. So whenever you see headlines like that, you always have to step back as an investor and say, this could be a situation where, yet again, the market can climb the wall of worry.
Denise Chisholm of Fidelity, it's great to have you back on Bloomberg Tech. Thank you very much. Let's get to shares of AMD and some breaking news crossing the Bloomberg. The US Department of Energy is said to have formed a $1 billion AI pact or partnership with AMD. That's according to a report from Reuters. AMD is said to be constructing 2 supercomputers for the department as part of that pact. The stock was in negative territory. It swung to a gain of about 2%. It's paired that now up 0.9%. But we'll try and confirm that story and bring you some more. Karen.
And coming up, more AI. Crusoe CEO Chase Lockmiller is joining us to talk about the company's latest fundraise, a $10 billion valuation. We'll talk AI compute. This is Bloomberg Tech.
AI data center startup Crusoe has raised a new $1.37 billion funding round that puts the company's valuation over $10 billion. Crusoe's partnered in developing the first installation of OpenAI and Oracle's Stargate project in Abilene, Texas. Let's bring in Crusoe CEO Chase Lockmiller, who's in town for Nvidia's GTC DC, and you're going to be speaking. The investors in this round are important. It kind of signals maybe where some of your next activity will be. But I think in the context of the valuation, I understand Crusoe to be a critical piece of the build out here. It seems almost a bit modest, that valuation.
Yeah, we feel like it's a great valuation for investors to get in, and we feel like we have a lot of room to grow from here. Just a lot of momentum kind of happening across the space, and we're well captured. We're well positioned to capture a meaningful amount of it. So we're thrilled to bring on.
You're very busy in America, right? But what is your ambition for the Gulf and the Middle East, and what projects you might want to build out over there?
We're looking at a number of different things in the GCC. Obviously having Mubadala as a capital partner gives us a very strong partnership in the UAE. We are also sort of evaluating some of the things that are going on with the UAE Stargate and some of the ambitions in Saudi, but we haven't announced anything quite yet.
Chase, I want to give context to our viewers who know you for what you're doing with Stargate. You're also actioning in Europe too, maybe Middle East. But coming down to it, you're a cloud provider, data center provider, manufacturing. You've got an edge when it comes to energy. That was kind of the winning formula when you first ever founded Water-Service Bitcoin mining. And I'm interested as to what sets you apart from a CoreWeave and other neoclouds out there.
I think there's a number of things. I mean, we've taken this vertically integrated energy-first approach kind of from the start and the founding of the business. I think a lot of the value that was unlocked from this first Stargate campus in Abilene was the fact that we had access to 1.2 gigawatts of power that could energize this very large cluster of Nvidia GPUs. Building it very, very fast required us to have creative designs and flexibility with a lot of modular components that went into constructing this very large campus with a lot of those modular components being manufactured offsite. I think we've built a very high-performance software stack to enable these AI factories to work very effectively and at scale, integrating a lot of great managed services like our managed file systems and managed Kubernetes that enable innovators to do their life's work on incredibly reliable and high-performance infrastructure.
Those innovators, we know OpenAI is one of them, but you're busy building elsewhere in Wyoming, not just in Texas. Who are you building for there? Can you tell us a little bit about where the appetite's coming from?
We can't speak about who we're working with directly in Wyoming quite yet, but we have a great partner there, and we'll be thrilled to come back and tell you all about it when we're ready to announce it publicly. But it is a exciting campus just from both energy perspective and the scale it presents. What we've announced initially is 1.8 gigawatts. But there is a plan to take it to 10 gigawatts. So it will be a very, very large campus for AI computing infrastructure, and we're thrilled to have a wonderful partner there.
Last week, the Trump administration made some announcements about how they want to speed up the electrical hookups for data centers. That's like at the core of the president's strategy: cut red tape, deregulate. Just your reaction to what the administration's doing about speed matching supply of power to infrastructure?
I think we're excited to have the support of the administration for some of the critical blockers to moving faster. One of our core values as a business is to move fast and make things. Speed is really at the essence of and at the core of a lot of what we do. One of the more frustrating things to be slowed down by is waiting for a permit to be approved, waiting for some sort of application that's in the hands of a government agency, and seeing the urgency from this administration that saying like, hey, we need to support the private sector to go out and build this infrastructure so that America can lead in artificial intelligence is just a great indicator of what's to come, and we're really excited to have that public-private partnership. We think it's a very healthy dynamic that's at play right now, and we're very big supporters of Secretary Wright and what he's doing to help make this happen faster.
The key part of the infrastructure that you're building is the chips that go in the data centers you're building. Strong with Nvidia. We've just had at the lead of our show that Qualcomm's trying to get in on AI accelerator marketplace. What do you think about an offering from a Qualcomm? What's your read on other competitors coming forward?
Well, I think everybody's sort of taking a slightly different angle on this, and big supporters of there being more competition in the marketplace. I think that's very healthy when you have a market as big as AI and AI computing infrastructure. In the case of Qualcomm, I think their flavor that I think fits them a little bit better is more AI inference closer to the edge, closer to these on-device or near the endpoints where users will be interacting with infrastructure. So I think that fits very well with kind of the Qualcomm dynamic and their strengths and what they can bring to the market as AI gets embedded in all aspects of the economy and everything that people are doing on a day-to-day basis. We're a big believer that we will need infrastructure everywhere to help support intelligence everywhere.
Chase Longmire, It's so great to have some time with you as you're in town in DC for GTC, Nvidia's big event. You're co-founder and CEO of Crusoe. Thank you for joining. Now, coming up, Apple's future iPad Pros. Well, they're going to borrow some key features from the latest iPhones. We'll describe next. This is Bloomberg Tech. Apple, well, it may be porting over one of the iPhone Pro's latest innovations to the iPad Pro. The company is said to be eyeing putting a vapor chamber into future iterations of the tablets. It's the subject of this week's Power On newsletter from Bloomberg's managing editor for consumer tech, Mark Gurman. And talk us through, Mark, why this is such a big thing for the iPad and what innovation's really at stake here.
Yeah, let's just take a step back and talk about what is a vapor chamber. It's a liquid cooling system. So there's actually special scientifically developed liquid inside of the iPhone 17 Pro today. And the reason they did that is that they noticed their chips can run so powerfully, like they're in a laptop, where it can get the device pretty hot. And in something as thin and light as an iPhone, you can't put a fan in there to cool it down like you would in a MacBook Pro or a desktop or what have you. So this offsets that. But the iPad Pro is even thinner than the iPhone. And even though the thermal constraints aren't as constrained because you have that larger surface area, the chips are getting more performant. They just put the M5 processor from the MacBook Pro and the new Vision Pro in the iPad Pro. But you can see as they continue to add more performance to the iPad Pro and those designs continue to get thinner and lighter, something's going to give, especially when you can't put in a fan. So the solution is bringing that vapor chamber from the latest Pro iPhones to the next generation Pro iPads in 2027.
Mark, real quick, take us inside Apple and how Apple works. So why is it that they try the tech first on iPhone and then later roll it to a future generation iPad?
It really all depends. You know, there have been so many features they've put in the iPad first before they put in the iPhone or put in the Mac before they brought it to another product. So there's really no consistency there. I think it comes down to the performance needs for that particular product and the importance. Much more important to get the vapor chamber in the iPhone sooner. Remember, the iPhone 15 Pro came out a few years ago. Super hot. They needed to do something to address that, and that was their solution. The iPad Pros today, they don't really overheat, but there's going to be a time where the performance gets so high that if they didn't have the vapor chamber, maybe you would have that overheating issue. So it's all dependent.
Bloomberg's Mark Gurman and the latest Power On from Sunday. It's an absolute must-read. Thank you very much. Okay, coming up on the show, as President Trump makes his Asia tour, Nvidia hosts its GTC conference right here in Washington. That's an interesting dynamic and some curious timing. We will discuss it next. Be right back. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Look, this is what's going on, and it's largely semiconductor related. Starting with Nvidia, right? We are here in Washington, D.C., because they are doing their GTC DC edition conference this week. There will be news. There always is when it comes to Jensen Huang and his company. The dynamic, though, is that the President of the United States is on a tour of Asia, and we don't yet know where semiconductors and Nvidia fit within that dynamic in terms of news flow. Qualcomm's up 12%. At one point in the session, it was up 22% and on track for its biggest jump since April of last year. April of 2019. The story, they have an MPU, an AI accelerator card. It will ship next year, and it goes to Hyde in Saudi Arabia first. Severe reaction to them entering the data center market. Also go back to a story that we covered earlier in the program. Reuters is reporting that AMD has a pact with the Department of Energy to build 2 supercomputers. And that is a report from Reuters that's in that moment sent the stock up 2%. It's kind of given up some of that game, up 0.5%. But we started the day, as you can see on the left of the chart, in negative territory. Goodness, that's a lot. Caro.
What a semiconductor roundup. But let's head over to Asia. You just mentioned it, Ed, because President Trump is in back-to-back summits ahead of the highly anticipated meeting with President Xi Jinping later this week. Look, Chinese and U.S. trade negotiators, they've actually lined up a few easy diplomatic wins ahead of that meeting, but they've left deeper conflicts unresolved. For one, well, Treasury Secretary Bessent said that he believed China would delay its latest rare earth restrictions after the latest talks. But friction over the export controls does remain. So we go out to Bloomberg's Tyler Kendall, who joins us very late from Tokyo. Tyler, talk us through where we stand in terms of wins for a tech perspective here.
Yeah, hey, Caroline. Well, as you were mentioning, the U.S.'s one of their chief wins that they wanted to see this week was China delaying the implementation of its recently announced export curbs related to critical and rare earth minerals. But the U.S. Treasury Secretary maintains that the U.S. is not going to loosen its export controls related to advanced semiconductors, and that could potentially mark a setback for Nvidia's bid to rejoin the Chinese market. Now, I'm looking forward to your coverage this week of Jensen Huang being in Washington, D.C., and once he wraps up his time in the nation's capital, he's actually headed over here to Asia, where he's going to attend the APEC CEO Summit in South Korea. That's going to be President Trump's next stop after he wraps up his time here in Tokyo, because that is where he's going to meet with Chinese President Xi Jinping. So we're going to be watching this very closely as it unfolds for the rest of the week. Now, even as the U.S. maintains it's not going to loosen its current restrictions in place, our analysts at Bloomberg Economics say that they expect the U.S. to take off the table the threatened but not yet imposed restrictions, including those related to critical software and cloud computing. There's a lot to look out for here, but really the top line so far has been that there is this simmering intentions that is appearing to allow for a broader conversation about a broader trade deal down the line. But at this moment, we are really just looking at these key diplomatic wins, these top line wins, instead of a fuller, more comprehensive pack.
Bloomberg's Tyler Kendall, who's traveling with the president currently in Tokyo. Thank you very much. So Nvidia chips have been at the center of this trade impasse between the US and China. The company losing billions of dollars in revenue with its AI chips out of the Chinese market. The same week, President Trump plans to meet Xi Jinping. Nvidia is holding one of its biggest AI conferences at a massive convention hall just a few blocks from the White House. And it's a pretty clear sign of the growing stakes in Washington for the world's most valuable company. Bloomberg senior tech editor Mike Shepard joins us to discuss. The calculus from Jensen Huang's point of view is very simple, where once they had 80% of a critical market, they now basically have zero. And it's something he wants to reverse through the president and this administration.
He has been making great efforts to do that, as we have seen all year. And it's not just in the many appearances that he has had with Donald Trump. Remember, he was present, of course, for the unveiling of the AI action plan. He was also with the president on his trip to the Middle East earlier in the year. And he joined Donald Trump on the visit to the UK in August, where they unveiled more AI chip deals. But there is more to it than that. The company is also investing in its lobbying operation here in Washington. It's not just this come and go big event at the convention center just a few blocks from here. They are also hiring more lobbyists and spending more to try to make sure that their influence operation is here to stay.
And that influence, Mike, more broadly, is there an inbuilt confidence that they will have the access that's necessary for China? Because there's been this ongoing narrative in the Republican Party itself, torn a little bit about the hawkishness that they should have for China and the access to deep technology that should be allowed or not in the case.
Well, Kara, you hit the nail on the head right there with the tension here in Washington over whether and how much to allow Nvidia to return to the China market. And really, it centers on national security concerns. Many in both parties here in Washington, lawmakers and policymakers from the prior administration, and even some in the current administration, have some misgivings about allowing China to have access to the sophisticated artificial intelligence chips that Nvidia produces. One of the big concerns is that granting that technology to Beijing opens the door somehow to the Communist Party there somehow employing it for military and intelligence gathering purposes. And that would be at cross purposes, of course, with what the national security apparatus here in Washington wants to see. China is still seen as the top geopolitical rival with the U.S., and they don't want to hand any sensitive technology in that direction, citing those national security concerns. So we will see how that comes up in the conversations here during the NVIDIA conference. We'll be looking to see what Jensen Huang says, not only during his keynote, but also in other aside moments with the media and other folks, if this comes up in any way. And we'll also be interested in seeing how lawmakers who are in attendance tomorrow may actually be reacting to that, to his sales pitch of a return to China.
Bloomberg's Mike Shepard, thank you very much. So a meeting between US and Chinese Reps are drawing close attention from the defense technology sector and its investors. Many see new opportunities emerging under the Trump administration, particularly in areas like space defense, cybersecurity, advanced manufacturing, sectors increasingly viewed as arenas of competition between Washington and Beijing. Joining us now is Mina Foltas. He's the founder and chief investment officer of Washington Harbor Partners. Welcome to Bloomberg Tech. I mean, that is the dynamic. There is tension economically and otherwise between the United States and China. But if you're a venture capitalist or private growth equity player, you see an opportunity.
Thank you so much both for having me here today. At Washington Harbor Partners, we're running our daily ground game. We're meeting with the Department of War. We're meeting with the national security community, with the White House, with Congress, to listen and to engage and to understand what are the greatest mission needs, what are the market gaps, and where can we find the best founders with the best leadership, with the best technologies and capabilities to meet those needs and to fill those market gaps.
You just mentioned the Department of War. Last week, I was in Los Angeles with many space technology leaders, and they very much say that space is the next warfighting domain. Their point, which I wrote about for the Tech in Depth newsletter, is that Space Force as a government agency is a real player here. Do you agree with that argument, and do you see yourself doing business with Space Force?
That's a great question, and space is a critical warfighting domain that we're very interested in. We're very bullish on the Space Force. We're very excited about their leadership, their talent, their focus, the resources they're dedicating to this very critical warfighting domain. We're making active investments in the space domain. So, for example, we recently invested in a company called Turion Space, which is a space domain awareness company. They identify potential threats in space, they analyze them, and they potentially, help to react to those emerging threats and emerging technologies. We also have investments in companies like Stoke Space, Apex Space, and Quindar to meet these mission gaps and needs in space, and we're on the lookout to be much more active in the space domain.
Stoke Space just had some interesting news in and of itself about its own fundraise. I'm interested, Mina, more broadly then, what is your ask when you're thinking about later this week, the meeting between Xi and Trump? How worried are you about rare earth metals? How worried are you about access at the moment when so much of this is integral to some of the startups that you back?
Thank you, Caroline. So the whole world is watching. Everyone's following the headlines. And at Washington Harbor, we just have our heads down and we're running our daily ground game. Rare earths, the U.S. supply chain, we think is a very high priority. We're investors in a company called Vulcan Elements, which we think can help create that domestic supply chain and ensure that we have access to the most important materials for both robotics and drones and other very important mission needs. Production at scale, we think, is an increasingly important pain point. We're investors in companies like Anduril Industries, which brings hardware and sensors and munitions to the mission edge. Beyond just things, we think data is incredibly valuable and valuable and powerful. We think bringing data to the edge and empowering the warfighter and the operator with AI and AI-enabled capabilities is also, of incredible importance. So we're invested in a company called Raft, which brings that decision-making capability using AI to the mission edge. And finally, power and energy. Resilient, mobile, safe power and energy anywhere in the world for the warfighter, we also think is incredibly important and very critical to the supply chain.
Just remind us of your thesis. At this moment, we've suddenly felt like 2025 has been the year that we're all talking about defense tech. But the LPs that are in Washington Harbor Partners, the likes of the corporate pension funds, the endowments, the foundations, have they always been there backing this thesis? How much have you suddenly heard of this wall of demand coming from those that want to access this VC focus that you have?
We are very fortunate to have very focused LPs who have been very passionate about bringing the best technologies to not only the warfighter, but also the civil servant. They see it as having been unfair that those who are making the greatest sacrifice and taking the most courage haven't had the best technologies and have critically been 8 to 10 years behind the Fortune 500. Today, they're all universally excited that in an area where we haven't had the U.S. military modernize in nearly a generation, all the stars are aligning now to change things now more than ever. Congress has appropriated real dollars to acquiring capability and next-generation technologies. Both sides of the aisle are in agreement today that things have to change, that there needs to be acquisition reform, and that they're trying to enable the Pentagon to acquire modern technologies and capabilities.
Just very quickly, the timeline that all of the defense apparatus this nation runs to is conflict of some form, 2027, US and China. Do you model for that same timeline?
You know, we model for ASAP. We model for the urgent needs and not knowing when there could be conflict. And so the critical thing here is that both military leaders, civilian leaders, entrepreneurs, investors are scaling up, and they're all acting with a sense of urgency to make sure that the warfighter has what they need in the next 2 weeks and doesn't have to wait 2 years to get what they deserve and need to fight this battle.
Mina Faltas of Washington Harbor Partners, it's great to have some time with you today. Come back soon. Meanwhile, coming up, and as big tech gets set to report results, AI bubble fears they're lingering. We're going to discuss that next. Is it real? This is Bloomberg Tech. Could the AI boom be headed for a bust? Bloomberg Intelligence's Brianne Doherty says not yet, calling AI, quote, the backbone of a modernized industrial economy, not its next speculative tale. Pleased to say Brianne joins us now, working with Jessica Lin as well. Just give us the fundamental underpinnings that gives you confidence that this isn't some tech wreck rewritten.
So I think what's really interesting is we actually look at the equities landscape a little bit different than everybody else. So everything we do is through a thematic lens or a thesis driven. So we actually carve up the equities landscape into AI, decentralized energy, grid tech, space. Ed, you guys were talking about this a few minutes ago, space, quantum computing. So when we think about tech or we think about energy, we're actually looking much more discrete. And right now, what we're looking at right now is that we've seen an incredible rise in correlations between AI and decentralized energy, transition metals, which again, rare earths and other metals critical to the transition. So those correlations have been rising over the last year. What's also very interesting though is we're seeing that those names or those themes have much higher beta to AI than they used to. And more specifically, it means they're getting hit a little bit harder on the downdraft, right? So when you get AI pullback, you're seeing those decentralized energy, grid tech, transition metal names actually feel some pain on that. But when we look at how these secular trends are actually progressing, there is just such huge underlying opportunity in the bottlenecks, in the retrofits, in the fact that, let's be honest, the power grid itself was already aging. There's a lot of investment opportunity there.
If you are a Bloomberg Terminal client and you're listening to the show, first of all, look up at the screen and really focus here on what Brianne's about to say, and then check out her research on the terminal. Seriously. You're doing a comparison with 2021. Why? Right. Why look at 2021? And then you're saying this is what we think will happen in 2026. Answer those two, please.
So we're looking to 2021 because that's the most recent correction, if you will, that we saw. And a lot of people refer back to 2021 where we see a lot of that particular US technology really dive down into 2022. So that's a really good reference point for us. Something that we are flagging, though, it's pretty hard to make comps, right? When you go back to the dot-com era, we're not in the dot-com era. We're looking at, when we look at the 18 biggest, most powerful names in our AI theme universe, for instance, we're talking about 24 trillion of market cap. In the dot-com era, that was more like a $7 trillion type number in today's dollars. So what we're looking at is 2021 is the most recent comp where we saw a massive market correction naturally. And where we look to 2026, though, we don't expect that to happen. We've got rate cuts coming. We've talked about that a lot in the last few weeks as well. So rate cuts are coming. They're not on the rise, which was also a big part of that time period. And then more importantly, though, we are very much flagging some tension. So while we do think that we're very much in a boom, this isn't a bust, it's not to say that it's not going to be without tension. And the biggest tension we're watching for is the fact that we've now seen tech investors, tech dollars, flock towards industrial materials, energy names. Well, guess what? Those tend to be longer build cycles. So the tension on quarter-to-quarter earnings, tech investors maybe aren't used to the patience that are sometimes required in there. And so we do expect some volatility because of that.
Brianne Doherty of Bloomberg Intelligence. We just showed it, but it's must-read research on the Bloomberg Terminal with Jessica Lin. Thank you very much. Now, coming up, we're going to discuss how Warner Brothers Discovery is looking for help blocking the Ellisons. That's a dynamic. This is Bloomberg Tech.
Time now for Talking Tech. And first up, ahead of a meeting between President Trump and the South Korean President Lee Jae-myung, the South Korean leader is saying that the countries remain stuck on all the major details of a $350 billion investment pledge. Take a listen.
투자의 방식,
the method of investment, the amount of investment, the timeline, and how we will share the losses and divide the dividends, all of these remain sticking points. The US will, of course, try to maximize its interests, but it must not be to the extent that causes catastrophic consequences for South Korea.
Trump and Lee, well, they are set to meet on the sidelines of the APEC summit. Plus, Nelson Peltz's Trian Fund Management is teaming up with tech VC General Catalyst to buy the rest of Janus Henderson. Now, the two firms plan to use AI to drive the asset manager's next phase of growth after Trian helped bring the CEO, Ali Dibadj, and Janus Henderson posted 5 straight quarters of positive inflows. And GameStop shares, they jumped, well, pretty seismically in the pre-market. Now a little bit off that, but they're trading after a White House X account reposted the company's statement declaring the console wars over. GameStop was reacting to Microsoft's plan to release a Halo Combat Evolved remake for rival PlayStation 5 in 2026. More on entertainment now, as Warner Brothers Discovery announced a strategic review. Media giants, they have been encircling the company for a potential takeover, the most aggressive of which has been Paramount Skydance, led by David Ellison, offering merger prospects no less than 3 times already. Bloomberg's media and entertainment managing editor, Luca Shaw, you've been writing about it over the course of the weekend. And why has David Zaslav been pushing back on Paramount Skydance?
Well, several reasons. The first of which is they think they can get more money. I think there are concerns about David Ellison and Paramount Skydance as a buyer that we can get to, but David Ellison has increased his offer 3 times in a row. All of the chatter around potential deals has led to a huge spike in the Warner Brothers Discovery share price. And so, they're trying to start something of a bidding war, because while there are other parties who may be interested in parts of the business, so far David Ellison is the only one who's come out and said, I want the whole thing.
He wants the whole thing. How are employees reacting? How is just the company surviving with what is a big question mark?
Well, look, employees at Warner Brothers Discovery are unfortunately used to this type of uncertainty around deals. Warner Brothers and HBO, and there have been various names of the kind of the corporate entity, Time Warner, Warner Media, but Time Warner got sold to AT&T many years ago. Then it got merged with Discovery. So I think a lot of them feel like they've been in one never-ending integration meeting with lots of layoffs. And, David Zaslav's a divisive figure internally at the company. So some people are very excited about the prospect. Some people are dreading it.
Talking of excitement and where excitement is at the moment in the world of entertainment, talk me through BTS. Talk me through the sheer scale of desire to get into these pop bands from Korea.
Yeah, so BTS is, I'd say, the band most responsible for popularizing K-pop around the world, certainly outside of South Korea. The best-selling artist in the world for a couple of years, I think in 2020 and 2021. They've been on hiatus, essentially, because the various members of the military, various members of the group have been serving in the military. They are coming back with a new album in March, and then going to go on their biggest tour ever, according to my sources, about 65 dates, including more than 30 in North America. And there's a huge fight between the 2 biggest concert promoters in the world to get to be the company to promote it.
Meanwhile, all the fights at home are for costumes for K-pop demon hunters. So clearly it's a theme. Bloomberg's Lucas Shaw, thank you very much indeed. It's a great read. Go get to it. And his newsletters from all of his team. Meanwhile, that does it for this edition of Bloomberg Tech. Quick check on Qualcomm in particular. That was the breaking news at the top of the hour, the fact that Qualcomm has indeed decided it's going to be unveiling a competitor to Nvidia, wants a bit more of the AI slice of the pie. And boy, if shares moved off the back of it, we're up more than 12%, coming off of what was a 20% move at one point. But we are risk on across the tech world as we prepare ourselves for a meeting between US and China. Don't forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify and iHeart. We've got a thick and fast earnings week. Stick with us for it. This is Bloomberg.